morning, viewers, and welcome to the Islamic Finance Weekly, where we capture the activities and discuss key developments in the non-interest finance market. Effective risk management is one of the significant factors influencing the performance of bank stocks. The 2008 and 2009 global economic crisis that badly hit financial institutions around the globe prompted regulators, practitioners, and researchers in the banking industry to advocate for and adopt effective risk management for the sustainability and profitability of the banks, whether conventional or Islamic. On today's episode of the Islamic Finance Weekly, our conversation will seek to understand the value of Sharia compliance risk management to Islamic financial institutions. Joining me this morning virtually is my guest, Mr. Opeyemi Yusuf, a senior audit consultant, financial services industry. Good morning, Mr. Opeyemi.
Yeah, good morning to you. Thank you very much for inviting me. I'm really glad to be here.
Let us start the conversation. The Islamic financial institutions are urged to establish a comprehensive Sharia risk management tool for their services. Share with us your perspective of what risk management entails.
All right, thank you very much. This is really a very good opening question. So in a very simple language that is easy to understand by anyone from any background, risk management is simply that process of identifying, analyzing, and evaluating the risk that are involved in an organization in a particular process, and putting in place the structures and the controls which can assist to mitigate against the adverse effects and impacts of this risk. So that's simply risk management. You're trying to identify what are the risks, analyze them, understand their consequences, and then establish structures that would assist you to minimize the impact of this risk and manage them properly. So that's basically what risk management is. So from a Sharia risk management perspective, we see this as a process that would assist the Islamic financial institutions, IFIs, to identify Sharia non-compliance risk, which of course is very, very common with any Islamic financial institution. So this risk management procedure would assist them to identify Sharia non-compliance risk and also put in place the structures that would enable them to promptly identify them and also prevent the likely occurrence of this risk. And in the case whereby this risk actually crystallize, there are also the risk management procedure framework will also assist to minimize the impact that it would have on the Islamic financial institution. So that's just like a brief snapshot of what risk management is.
All right, thank you very much, Mr. Opeyemi. From your point of view, the purpose of risk management is to help organizations to understand, evaluate, and take actions on all their risk. But for the benefit of ethical investors and the general public, give us further insight on what Sharia risk is and how does it apply to Islamic financial institutions?
For financial institutions generally, whether conventional or Islamic financial institution, they operate in the same economic environment, right? And they are both faced by similar risk, although at varying degrees, right? So we have operational risk, you have credit risk, you have your liquidity risk and all of that. But for Islamic financial institution, there is an additional layer of risk, and that is the Sharia non-compliance risk. So when we talk about Sharia non-compliance, we are talking about the fact that for any Islamic financial institution, IFI, the principal objective or the core objective of such an institution is based on the principles of the Sharia. And what that means is that everything, all the products which such an institution will market to the general public, all their activities must be strictly in line with the Sharia principles. So, in a situation whereby this is not so, then there is a risk somewhere. And that's what we are going to refer to as the Sharia non-compliance risk. So, for Islamic financial institution, we are talking about the fact that this Sharia risk is actually the most important risk that distinguishes them from their conventional counterparts. And it is very, very, very critical that any financial institution, they put in all the process to ensure that Sharia non-compliance is something that they are really, really, really looking after. I think this actually captures what Sharia non-compliance is, with regards to the IFIs.
Okay, you mean Sharia non-compliance risk is vital to the establishment of an effective Sharia governance system?
Yeah, so to take it further, in managing Sharia non-compliance risk, that means that one of the tools that we can use to achieve that, which you probably would ask me this later, most likely. So one of the effective tools is for us to have an effective Sharia governance framework and structure.
Exactly.
So this framework is an integral part of the corporate governance of an Islamic financial institution. So added to the corporate governance of any Islamic financial institution is the Sharia corporate governance. And this Sharia corporate governance already has a set of minimum requirements, which of course there are processes, internal processes within the organization, which look into the proper or effective oversight, accountability, and responsibility of those charged with governance with respect to Sharia in the organization. So, and one of it is the fact that, okay, as a minimum, there is for any Islamic financial institution, there is always a Sharia committee, a Sharia advisory council, depending on the climate, whatever name it is being called. So this particular committee will be made up of experts that have the knowledge of Sharia, who can say that, okay, this product that we are marketing, this product has been reviewed and it is not in contravention. It has not contravened any Sharia provision whatsoever. So, and that gives comfort to the general public that, okay, the reason why I am patronizing the Islamic financial institution is because I believe that, okay, this thing is actually in line with my faith. So that Sharia governance framework is there to protect me as a consumer that truly this thing is actually Sharia compliant.
Thank you very much, Mr. Opeyemi. There is a possibility that Islamic finance transactions can be challenged if they do not comply with Sharia. How important is it to safeguard against Sharia non-compliance risk?
Oh, that's very, very fantastic. It is really the importance of safeguarding against Sharia non-compliance risk cannot be overemphasized. Like I said earlier on, it is one of the most important risks that faces any Islamic financial institution, because that is what distinguishes you. That is your value proposition that, okay, you have your counterparts, your conventional counterparts, marketing their own conventional products. You also have your own product, right? So, but what distinguishes my own product from that of others is because mine is actually in line with Islamic law, Sharia, right? So now, non-compliance with Sharia can have a very serious, implication for any Islamic financial institution, ranging from the reputation risk, loss of public trust, and even, as we have seen over the years, it's very possible also for us to have, loss of revenue, loss of profits, erosion of profits as a result of, Sharia non-compliance. So, and according to the IOFI guideline, I understand that Islamic financial institutions are actually meant to perform a yearly Sharia audit on their products to ensure that they're actually they're actually in compliance with the provisions of the Sharia. And when we also look at it, in the last 2 or 3 years, we've seen an increase in the number of Islamic financial institutions coming up, especially in the fintech space. A lot of innovations are actually occurring every day, year after year, and a lot of people also are they are also realizing the potential benefits of Islamic finance. So they are now beginning to patronize Islamic financial products, thereby leading to an increase in the volume of Islamic financial activities. What that means is that there is a need for us to also increase our oversight in the area of Sharia to ensure that what we are truly giving out to the general public is actually Sharia compliant. We have 2 reasons why people patronize Islamic financial institutions. 2 major reasons. The first reason is because of the economic value that it offers. The second reason is because of the fact that it aligns the ethical aspect, the fact that it aligns with their ethics and their faith. So now, the majority of those who patronize Islamic financial institutions, especially those who are Muslims, right? They patronize it because it is in line with their faith, right? And that they are earning halal income as a result of that. So what now happens is that a lot of them, sometimes they have some other conventional alternatives, but they decided to forego those ones, even when they feel that, okay, a conventional product might yield a greater profit for them, a greater return, a greater interest on their investment. But they decided to forego it because of what? Because this is actually Sharia compliant. So what then happens if they realize that, truly the investment in which I have put my money in, or the products are bought with an Islamic bank, is actually not Sharia compliant? You can feel, you can imagine that dissatisfaction, how demotivated such a person would be. And it can really take a time for an Islamic financial institution to really regain its reputation as a result of non-compliance with Sharia. So I think it is really, really critical because of the fact that the reputational damage that it will cause, the fact that the public trust that will be lost as well, and also potential loss of revenue. Another scenario whereby an Islamic financial institution can, lose revenue is when they mistakenly invest in a particular product and they
product.
Exactly, yeah, or a ribawi product that is interest-based, and they later realize that, oh, this thing is actually interest-based. We ought not to have invested in this and all of that. Do you know what happens to that income? If that income should be deemed non-Sharia compliant, the institution might be required to forego the entire income, even if it runs into millions of naira. They would have to forego it and give it out in charity. They cannot recognize it as part of their income. So you can imagine that. And that is not applicable to the conventional financial institutions. So it's really, really a very critical issue. And that's something that upcoming startups in Islamic finance need to actually look out for and try to safeguard against.
So if I get your point clearly, you mean Islamic financial services must ensure Sharia compliance in any of its operational activities and financial products in order not to be exposed to risk.
Yes, that's very, very correct.
All right. Well, thank you very much for your insight. Now, Sharia non-compliance risk from its framework ensure that operations in the Islamic and banking finance industry comply with ethical standards. How do you think Sharia's risk can be well managed?
Yeah. So Sharia risk can actually be managed. And I would like to also start by saying that no, it is not a risk that you can eliminate in as much as you are out into the markets and you call yourself an Islamic financial institution operating under the principle of the Sharia and you are still in business. It is a risk for you. You just have to ensure that the risk or the likelihood of these things, this risk crystallizing, is reduced to its minimum, barest minimum, or eliminated. But the risk would always be there for you. So now, the first thing that should be done should be for that Islamic financial institution, not just bank this time around. We have it could be a banking and capital market entity, it could be an insurance entity, takaful, it could be another entity that operates in the asset and wealth management industry. The first thing is to identify what are those risks in my processes and be aware of those risks. In Nigeria today, we have a number of institutions coming up, and alhamdulillah, it's a very good development, right, in the fintech space and all of that. So, but these institutions also need to see that in as much as they are offering an Islamic finance-based product, they also need to ensure that they obtain Sharia experts as part of their team, Sharia advisors as part of their team. They may not be a full-time staff. They don't need to be a full-time staff, but they have to be an integral part of what they are doing before they finalize on any contract, any product, before anything is issued out. These things, products have to be certified by the Sharia Advisory Board.
Thank you very much, Mr. Opeyemi, for providing insight on how Sharia risk can be well managed. Also, the policymakers and the Sharia advisors of the Islamic financial institutions must structure the hedging tools of mitigating risk and not eliminating business risk. So, as we wrap up the conversation, how will you assess the activities and efforts of non-interest financial institutions in Nigeria with respect to Sharia non-compliance?
Thank you very much for this. Based on my own assessment and, of course, information that's publicly available, I would say that our Islamic financial institutions, especially the major ones, are really, really trying their best to ensure that their staff they are well aware of what they are out to do in terms of their Sharia proposition and managing Sharia non-compliance as well. So, for instance, take Jaiz Bank for example, followed by Taj Bank and other takaful entities as well. So all of these entities, they all have a very solid advisory committee of experts. I know for example, Jaiz Bank as one of the prominent Islamic financial scholars in the world, as the chairman for their advisory committee of experts. I think Professor Mansour Kaf, if he's still, I think he's still the one chairing that committee. So, and several other members of the committee as well, who are knowledgeable in the area of Sharia. Not just knowledgeable, they have the correct industry experience, several years of industry experience, several years of serving Islamic financial institutions, both in Nigeria and even outside of Africa. And aside this, I'm also aware that most of our Islamic financial institutions, they also have, like an internal audit department, which is strictly Sharia focused. So this internal audit department does what we call Sharia review. There's a difference between Sharia audit and Sharia review. So Sharia review usually it's an ongoing activity. It takes place on an ongoing basis. Right? While the Sharia audits, it's usually timed. It could be once in a year. It could be twice in a year. They could have an interim review, interim audit, and maybe a year-end audit and all of that. But for Sharia review, it's always an ongoing thing. And they are doing this just to ensure that we, the general public, who have actually believed in them and have trusted them with our money, our wealth, they are doing this to ensure that our money, we get the Sharia value that they have actually proposed to us. So I would say that our institutions are really, really doing very well. And I'm aware that, from time to time also, trainings here and there are being carried out, and they're also encouraging their staff as well to go overseas for trainings. I know of Jaiz Bank staff, Taj Bank staff, who are actually undergoing their PhD studies in Islamic finance in Malaysia while also working for the entity. So they are building that manpower and to ensure that we have the best generation of the next generation of Islamic finance scholars who would actually propel the industry forward and achieve that prosperity in the sector which we all aim to achieve. So yeah, it's really, really, really been a very good experience, and I must commend them for their efforts.
Indeed, Mr. Opeyemi, the process of Sharia non-compliance risk is very important. It provides a comprehensive guide to non-interest financial institutions in detecting and eliminating risk from the entire operations in Islamic banking and finance, including human resources, as you explained, business processes and procedures, as well as technological advancement. Thank you so much, Mr. Opeyemi. We appreciate your intervention on the value of Sharia compliance risk management to Islamic financial institutions. Have a great day.
Yeah, thank you very much. Thank you for inviting me. Enjoy the rest of your day too.
And you. Bye.
Bye.
And that brings us to the end of today's conversation. Watch the Islamic Finance Weekly videos on Web TV Banking channel. You can also follow us on our social media platform displaying on the screen. Until next week, many thanks for watching. Bye for now.